Hello guys, we're back again. I have 4 sectors of videos that I have to record now. This will be the first. This will be the Twitter recap where we look at different charts from different people that I have found interesting for the past few days. So let's get right into it. This is the Happy Hawaiian. HE, this is First Majestic. Still above the wedge, but whoa, this is tiresome, and I agree. Again, we have the breakout here. Excuse me, how this. I can't do it. Anyways, we have the breakout. We're doing some sort of retesting here. You could argue that you have a 1 second. I'm trying to do something here. Bad. Oh, never mind. You have the breakout here and the retest. You could argue that this one is connected to here, so you get that trend line here. But anyways, it's for the past year. I didn't think that the investment into silver and gold miners would be this much of a drag to the upside. It's going down, but I would have thought at this point that we would have been going higher way faster than we currently are. But hey, it is what it is. Still the backtesting here. Hopefully we get the resume to the upside. This is Jerry Robinson, also a great technical guy. He's really good at what he does. This is just a quick it doesn't work. Anyways, it's just a quick. This is just a quick tutorial, whatever you want to call it. Very fast, brief about the and this is an inverted head and shoulders. You can also have a and head and shoulders where we are at the top of a move, but still what you have and what I am looking at often, as you know, is the big head and shoulders, right? I love this pattern. It's a big reversal pattern. You get it in both. You can get it in both ways. You have the neckline here, which often is horizontal. You can also have it sloping down. You don't want the angle to be too steep because then it doesn't make much sense because then you're still in a big downtrend. So if you would have something like this, right, for the inverted head and shoulders, doesn't make it much sense. So you want it to be as horizontal as possible. Sloping down is fine. Also, the right shoulder, typically you want to be above or at the same level as the left shoulder. But you would normally want it to stop before, so you have more buyers stepping in earlier compared to the left shoulder. That's more bullish than if they were at the same height. But still, both are very valid, doesn't matter. But that's how I have seen and studied this inverted head and shoulders pattern. Again, if you have the right shoulder coming down to right, let's say down to here, where you saw the buyer stepping in, it's still an inverted head and shoulders, but again, you have a more bearish right shoulder compared to the left shoulder, and you typically want it to stop before you get below that left shoulder level. So that's how I have seen it. And the way you do it, obviously, is when we break. This is the low or the head low, and then you have the neckline. The distance here, let's call it the distance, is what you can add to here. So if this is $10, this move here, then you can add $10 from this level and all the way up to $10, and that's your exit. So that's how it's done. And often you get overshooting. That's totally fine. You still need to keep that. If you are trading it, you need to keep the exact distance and trade that and get out. Even though you get further up, it doesn't matter. That's your exit. So yeah, that's in my view, very short inverted head and shoulder. You see them often in my charting as well. So yeah. Cycles fan here. Gold close below the 20 DMA, you can see here. The current cycle may be bullish if we can bounce off this lower Bollinger Band here, meaning you have a lower high here. So you have exactly what we're looking at, right? The head and shoulders. But this would give us again, as we talked about, a lower right shoulder, meaning it's not that powerful, but still, for now we're holding to some degree, as you can see, the low of the left shoulder. But yeah, it seems like we want to go down to the lower Bollinger Band, and hopefully that's where we pause. So yeah. This is the next big trade, the VIX. Just to show you, the VIX is the volatility index. And we are right now at the lows for the past 2 years. And we have a big hammer candle today. The stock market is also down big time today. And we're getting increased volatility, which is often where you see big turns in the market, where you have this low volatility. And if we start to see a spike, typically that's where you go down if you are at very elevated prices as we are right now. So I wouldn't be surprised if the SPX, the Nasdaq, and so on right here is going to roll over into and making a new low at some point in time. But I think the peak was in, or the high was in, given this metric, but also many others. But we would have to wait and see for the next 2 or 3, 4 days to see if this really is the peak for now, because there's a lot of momentum to the upside still, but we'll have to see who wins that battle. SX Trading, XLE, which is the energy ETF, mostly oil and gas. Who's shorting oil up here? And you can see here we have the trend line right, and we are just basically tagged it. I think if he made this trend line a bit obscure to the downside, then we'll hit it anyways. This is a bearish wedge to the upside, and he's accounting for a move down. So yeah, we will see. We have to break above here to get bullish, and breaking down would make us so that we have to make a new low here before we can go higher eventually. So yeah. Also, if you look at oil today, it's getting hit, what is it, 4%, 3% or so, even though the amount of inventory came down with huge numbers to the downside, meaning that there has been drawn a lot of oil from the inventories. So yeah, this is JC Parrott. Everyone seemed to be betting on this outcome. Do you really see it differently, or is this really going to play out like this? And I agree, this is the most obvious continuation pattern. But given that we are this late into the move, I wouldn't be surprised to see this being some sort of fake bullish setup where we break out and then we pull down. But again, that's totally speculation. For now, it's a very bullish setup. But again, we are so late. And obviously, when you get this clear setup that late in the move, we have to get worrisome. This is the RBOB gasoline futures. I don't know exactly what this is. I haven't been using that before. Gasoline futures on the verge of a major trend reversal above the 2.84. The bias is to the upside. And again, like we just talked about before, the inverted head and shoulders, you can see it here. You can see it here clearly. The lows, sorry, there it is. The lows are roughly, it's actually to the tick more or less, right? There are the lows for the left shoulder and the right shoulder. Big, beautiful inverted head and shoulders. And you can do the measured move if you want to, but still, this is bullish for gasoline futures. Again, I don't know exactly what this is, but yeah. So here is a textbook, more or less, inverted head and shoulders. So Heisenberg, Apple, the chart everyone needs to see. The trend line is so defined. It has on the Wikipedia. That's quite nice. It could be better, but anyhow, look at this one. Earnings Tuesday, that's tomorrow. So you can see the uptrend, right? If this breaks, you better, if you have Apple, I would highly suggest, again, not financial advice, to sell to get a better entry later on. Look at this move. For 2023, we are up 80% on Apple. That's the biggest company in the world, right? So that's $1 trillion or so in like half a year. And if we get some, I don't know, but anyways, let's see what earnings does. And if you break down here, it's a very good selling point in time. North Star, great guy, Kevin. Interest payments on the US government debt. This will not end well. I agree. Look at this. For the past, since March 2020, 80% more annual interest payments for the US government. They need to get the rates down big time because then their payments will get, obviously lower. So yeah, this is a ticking time bomb in the making. And how they get out of this one, I have absolutely no idea. Sahara, again, one guy that we also see a lot here. This is the SLV, the Silver Trust. And also you can see his charting here. Again, Similar, you could see you don't have the neckline defined, but you could have, again, some sort of inverted head and shoulders here. But we'll have to wait and see what happens here. There are some gaps that maybe needs to fill and so on, but still, we are in an uptrend, and now we are in a big correction phase. Hopefully, it will be more to the upside. So yeah. Sahara again here. This is gold. Similar, you have seen it before, the inverted head and shoulders, the neckline well defined at 184 on the GLD. Yeah, again, a great example of an inverted head and shoulders. Not much to say, just want to show you that if you look for them, you can see it all over again. And hopefully we start to curl up here again. To me, we have the 3 moves lower low. This is actually 4, but still we have made, oh, this is 3, excuse me. Yeah, this is 3 lower lows. So let's see, but we are below the moving averages by now, so which we need to overcome at very closely, but still. Yet another Sahara chart. This is DDX. Again, big breakout here, big retest to the breakout. So yeah, hopefully this is where we turn. He has also made a gap here that we have closed now. Also, we have gaps down here as well. But for now, as long as this hold at around 30, give or take, then we're all good for the GDX. This is Jake. Microsoft double top. Yeah, could be if we start to break down below this box here. This one right there, you can see it. If we start to get below here, then you have similarities, and I guess we could be in for maybe a cup and a handle, but you will definitely in some way get better prices if you want to get Microsoft. Also, you can see the MACD here rolling over or crossing over. So you shouldn't be a buyer here, that's for sure. If you want to buy, you wait. There are better risk reward setups in the future. I'm pretty sure of. Transpired the SPY here. You can see here breaking down, testing the 21 DMA. But we have broken down from this bad boy here, and to me, we are in for a bigger correction. And for that, you can use the Fib levels or the Fibonacci retracements to see where they are. I haven't done that for a while. Sahara again with my favorite sector, uranium. He says here, URA, uranium, big bull update, holding the pattern breakout. What he's pointing to is that you have the bull, right? You have this one, which we also have been looking at for quite some time, breakout, retesting, and we need to curl up of this bull here. But still, overall, all good, even though we're down. We were down like 4.5% for URA today, but we're down like 2% now. So we have retraced quite a bit to the upside again, which is nice. If we can get a very clean hammer candle, I'll check that in the uranium section today. So yeah, good. That's all I had. I will go on to make the next video, which will be the daily recap. I will see you there, hopefully. Cheers.